everybody. This is Jessica Stone from Stansberry Research with Tom Carroll, our senior analyst. And Tom has actually been taking this quarantine seriously in the sense that he's been home and interviewing fellow analysts about a question that a lot of people are asking right now. When are we going to see the bottom? So, Tom, when are we going to see the bottom?
Yeah, excellent question. I have been taking it seriously. In fact, I've been taking it seriously on spring break, which is where I was last week. And in reviewing all of the responses, I really can kind of summarize things into maybe 5 buckets, right? So number one, we remain a pretty bearish bunch. I think if we average all the numbers together, we collectively are looking for another 22% decline in the S&P from this past Friday's close, which was about 2,300. So that's point number one. Point number two is, the sentiment is really not quite there yet, right? So the negative sentiment is not right there. So why do we say that, and how do we say that? It's probably because many of our friends and family are continuing to ask us for stock tips and, hey, where's the bottom and what should I be buying? That simply is not the behavior of people when you're approaching a bottom, right? When you're approaching a bottom, fear is just rampant and takes over, and nobody wants to even think about putting more money, into a market that is in free fall. And again, we're just really not there yet. Third, we really don't know what we don't know. So what do I mean by that? Well, we're going to have a bunch of corporate earnings come out here in the next month, right? All of those companies are probably going to be bringing their numbers down, revising sales numbers, revising earnings numbers, right? And we know they're going to go down, but we don't yet really have a handle on that. We need an anchor there. Also, government fundamental economic measures like unemployment, which come out this week. Unemployment is going to spike. And so the market has not seen that data point yet and hasn't had a chance to react to it. So I think once we start to see some real earnings revisions and real economic numbers come out, the market can grab those, start making some assumptions, and move forward from there. Again, we don't have those yet. Also, let's not forget, we're in a presidential election, right? As many of us have forgotten over the last couple of weeks. But presidential election years come with their own host of cross currents and complications and winners and losers in the stock market. And this year was shaping up to be no different. So this whole global shutdown only throws more questions on top of a normal election year. Things like, is Trump done? He's in his last year of his first term with the market in the tank and high unemployment, right? That's not a good recipe. So, those are more questions that are going to be out there. I mean, Joe Biden too. He's an older fellow. This virus attacks older people. Does that create another question mark in people that otherwise would have likely voted for him? So all of those questions, I think, continue to stir the pot and keep people on the sidelines from investing. And then lastly, what does the future hold, right? And by future, I mean kind of end of this year, fall, early winter next year. Everything we're hearing about today are just data points, the number of new cases, the number of deaths by country, what people are doing. But this eventually is going to die down, right? Because we're all stuck in our homes. But it's also eventually going to come back. I think that the coronavirus is here to stay. I think it will blend itself into the normal flu season annually that we see. And when it comes back again in the fall, are regulators and government leaders and investors going to freak out again? Are we going to assume we're going into another complete global economic shutdown, right? Even the expectation of that could potentially cause people to, again, get out of the market or sell any kind of rally that maybe we see between now and then. So I think that's another reason why, a market bottom is certainly not here today and might actually not be in the cards until the end of the year.
These are some pretty dire predictions, Tom. How do we, or can we even avoid any of those?
Yeah, I think there's certainly, these are all negative things to think about, but at the end of the day, I'm an optimist. And I think there are some stuff out of there that are going to be pushing back against these negative trends. So one, you've seen it, is, government stimulus. Between the Fed and the Congress right now, we are very likely to see the biggest ever financial support from the government in the history of this country. So that's not to be discounted. Secondly, I would talk to, what government or what scientists are doing right now. I mean, literally across the globe, scientists are scrambling and working 24/7 to try to find some kind of cure or therapy that works against this virus right now. One promising one just came out of France, I saw last week, that combined hydroxychloroquine. It's a mouthful, with a common antibiotic you probably heard of, known as a Z-Pak, and saw some really interesting results. So again, a lot of caveats with it, though. It's a small study, but it showed some promise. I think as we get more data points like that, that will also ease the fear of the world and of the U.S. markets and help us start putting some money back to work. And then lastly, I'd point to something I call a one-time item, right? When I was an analyst, occasionally I'd get companies that would report earnings, either way above or way below expectations, but there's typically was some very easy, understandable reason for that. And if we as investors could get used to that and comfortable with it, at least in the near term, we typically saw through it. So I wonder if this world we're in today is going to get something like that, right? I mean, like I said, we don't know what we don't know. We don't know the earnings numbers. We don't know what kind of guidance revisions we're going to see. We don't know where unemployment's going to go over the next 3 months. But at the end of the day, we do know what's causing all of this, right? It's happening across the world. And so if investors can kind of put that, idea in a box somewhere over to the side and say, yes, it's going to be bad. We're going to get some numbers, but we know what's happening and it will get better. So let's start putting some money back to work. So to the extent that we start to get more of that traction in the market, which I think will come at some point, I think that's really running counter to all the negative trends that we're seeing out there in the market right now.
Thanks for that optimism. I wonder, out of all the analysts that you spoke to, did you get a chance to talk to Porter about his thoughts?
Oh, actually, no. And I specifically didn't ask him because he is putting together a free webinar, which is going to be broadcast on Thursday at 3 p.m. Eastern time. And, Porter loves times like these. He just can dig into all his theories and stuff and really think about what's going on and what he believes truly is best for investors. He's been working 24/7. I don't know what he's going to say. I'm looking forward to it. But again, it's 3 p.m. Eastern time on Thursday. You can sign up at stansberryresearch.com. Again, it's totally free, and I think it will be quite interesting and informative.
All right. And if you like the content that you're seeing here, please subscribe to our YouTube channel. Please also follow us on Facebook, Twitter, and Instagram. Thanks so much for joining us, Tom Carroll.
You bet. Thank you.